Bull or bear? I'm rolling my Howard Ruff coin tonight, and she comes up a bear. Let's see what happens tomorrow. Good evening, and hey, what's up, folks? This is Brian Kuzmar in a beautiful, rainy Lauderdale by the Sea. Take a look at this. Raining off and on all day, but man, sometimes a nice rainstorm, especially if you live in South Florida, and our rainstorms are like typhoons. They call them typhoons in California when we get a rainstorm here. But a beautiful day out there. Water kind of flat. I think it's going to be a little bit windier and wavier out there this weekend. I'm going to try to get out fishing and might not get to do it until Sunday. Meanwhile, not much seaweed on the beach either, considering that we have that huge seaweed pile sitting offshore here, I think. And maybe the winds just aren't blowing the good direction for that to push it on shore. Meanwhile, this is not a fishing report. This is not a beach report. This is not a weather report. I'm just sharing what a beautiful place I live in. Take a look at that again. 75 degrees. You gotta love that weather even with the rain. All right, my quote of the day, which many of you long-time listeners will recognize, and one of my favorite authors as a young man, Robert Heinlein, said, "Of course the game is rigged, but don't let that stop you. If you don't play, you can't win." And of course, this is mostly for my new folks out there to remind you that, all markets are rigged. I mean, the sad truth of the thing is, and I'm going to get into this in a little bit about the CME group and about, our whole entire, I'm going to, for some of folks out there, maybe a small percentage of you that still haven't realized, I'm going to have to tell you that Santa Claus is not real and that these markets are not run. The Comex markets, the commodity markets, the derivative markets are not organic, real markets that deal in supply and demand factors. They deal in bullshit paper and shenanigans. I'll get to that in a moment, but most of you that watch my show already know that, and people that are just discovering that say, "Well, I don't want to play in this market. It's rigged." All markets are rigged, folks. Every market you deal in is rigged. Your entire life is rigged to some degree, if you really think about it. Rigged from how you're programmed as a child to do certain things by your parents. The most well-intentioned people out there rig your life. You know that as well. Everything is about being rigged. Now, being rigged to the downside and upside, that's a different story. If your life is being rigged to the upside, then you're doing pretty well for yourself. You're driving a nice car. If your life has been rigged to the downside, then you're not doing so well. But everything is rigged out there, folks. Politics, economies, the media. Of course, I'm talking about all the stuff that is really evident as of the last couple decades, but that includes the CME group and the markets in which the oil prices are made, in which silver prices are made, gold prices are made. Folks, it's all a big charade, but the only way that you can win is the only way you can lose is if you don't play. All right, and because if you don't play, you're going to lose no matter what. What are you going to do? You're stuck in this crooked system that we're dealing with. The best thing you can do is understand how the game is rigged and make that work for you. It's like I've said it so many times in the past. If you're sitting at a particular game, especially a game you understand well, and someone's cheating and you know how they're cheating, all of a sudden you have a huge advantage over them. And we know how we're cheated in the Comex, Crimex market. So we have a huge advantage over that. You buy the lulls, you buy their dips when they're doing their dastardly deeds. You hold on, you wait for it to go up, and it may go down again. And if you got more money to pull the trigger, you buy the downs again. You buy the dips in these markets, because what are you really doing is you're buying great products that are rigged to the downside. And again, it's like buying filet mignon at 50 cents a pound. Even if you have to freeze it. So, yeah, I don't know, maybe not. But anyways, maybe that's a bad example to use. But let's take a look at spot gold, silver, and platinum prices today. Kind of sideways this week. Really, I can see these markets getting hammered down a little bit. Not a lot of activity to the upside. And again, but there's nothing organic about these markets, folks. 23.35. 968 platinum, 964 gold. There's just nothing organic about this. This is just purely orchestrated bullshit by paper derivatives markets run by the CME groups, Comex markets in silver, gold, and platinum. Again, not organic, nothing to do with real supply and demand, everything to do with paper, bullshit, and shenanigans, all right? But 1964, great opportunity to buy. I still think at some point we're going to have an oh shit moment. Listen, the game is rigged, all right? We don't have any other place to go for price discovery. That's a fact. where am I going to get my prices from on gold, silver, and platinum? You, anyone else? Where are we going to do this? I mean, there's great fancy ideas. Oh, let's get the mining companies to do it. Let's get the dealers to do it. But really, no. The CME Group's Comex Group, which are really like they're the mobsters. I mean, to be honest with you, the CME Group to me is in my opinion, is the modern day form of the mob in some degree, because they run this crooked casino called Comex. I mean, it really is a casino, and they've turned it into a casino where they allow large players, and that would be large whales, that would be the big mobsters out there, to go in there and run the game however they want to, at the detriment of the smaller players, which would be, the fish. But anyways, I digress. And we'll get there in a moment. Great prices to buy at, folks. 1964, 23, 35, 968. I mean, again, it's a gift. If they're going to rig prices any which way, if you're going to live in a rigged marketplace when it comes to selling physical products like gold, silver, and platinum, products that don't rot like meat does, and you don't have to freeze like you would have to freeze meat, and grain goes away, and oil, I don't know how long you can store oil for, but gold, silver, and platinum are non-deteriorating products that you can buy on the super cheap. Probably one of the best commodities out there as far as storing value in the long term, because I don't know if you can do that with grain, wheat, if you ask for delivery. And again, we're going to get in that in a moment here. Buy. That's just my opinion. I'm sticking with it. Meanwhile, my man crush, Ted Butler out here, wrote a letter to Chairman Gensler. And the reason he wrote this letter, and again, this is, I don't want to get into too much as Ted's newsletters here. He does, charge, and I highly recommend that if you have the money to subscribe to Ted Butler's Butler Research newsletters, that you do that. Because it's really good reading. He knows this market very well, and if you've got a vested interest in silver, that's worth the monthly subscription that you're paying. And you can also read his stuff for free in many places as well. A lot of the stuff that he posts in his new stuff you can find online for free as well. But again, just wanted to give him cred there, because I'm going to read some of his stuff in his recent newsletter. Ted says, finally, I mentioned on Saturday that as a result of news short position on SLV indicating a sharp increase, that I would be complaining to the Securities Exchange Commission and BlackRock come Monday. And as most of you know, this is a long-standing kind of thing that Ted, a while back ago, SLV had this huge short position that Ted Butler identified as being potentially just a smoke and mirrors way of someone being short a large amount of silver. Therefore, they shorted SLV to do this. It's convoluted. It's hard to understand. And if you do understand it, great. And if you don't, do a little bit of research. Go back and look about, you can read this stuff for free if you do a little Google or whatever research out there on your web. Oh gosh, Google it, DuckDuckGo it, Bing it, whatever the hell. Well, anyways, Ted says, I'm not sure if I've ever published any of my previous complaints, but thought appropriate to do so now. I did receive, and again, complaints are public. I guess when you file a complaint, it is kind of a public domain. So I hope Ted doesn't mind me reading this, but I think it's important for you guys to know as well, because the man nails it. All right. He says, I did receive an immediate and customary acknowledgement of the SEC from an email to Chairman Gensler, but no acknowledgement from either the CEO or President of BlackRock, who I copied on my email. To Ted Butler's wonderful credit, here is his email to Chairman Gensler. This is the sixth time I've complained to the Securities Exchange Commission about an obvious securities fraud and manipulation since last August that persists to this day. Now, for some of you new folks out here, if you don't know who Ted Butler is, here's a man that is probably for, I would say, at least 4 decades, if I'm correct me if I'm wrong, has been involved in the silver market, has been involved in trading contracts, he knows how to read COT reports like we know how to read, whatever it is we do in our own daily careers, all right? This is what he's done for a living for decades. So again, preface with that, let me finish this. I've yet to receive any response from your agency responding why the excessive and likely concentrated short position in SLV, the iShares Silver Trust sponsored by BlackRock, Inc., is not intentionally manipulating the price of shares of the trust and fraudulently depriving shareholders of metal backing promised by the prospective. Now, again, folks, apologize for this. It can get a little deep and confusing at times. These markets are probably purposely built that way to confuse you. But let me continue here. Wow, that rain is really coming down now. Don't mind me, I get distracted pretty darn easy. And it says here, data just published indicates that a short position, and this is Ted Butler's letter to Gensler, short position on SLB as of March 15th increased by more than 11 million shares to 47.5 million shares, the largest short position in 3 months. In a percentage terms, the new short position represents 9.5% of total shares outstanding, meaning that nearly 1 in 10 shares outstanding has no metal backing on SLV. Now, this is big, man, if you really think about this. Ted Butler is pointing out a huge deficit of physical silver that is not where it should be. And BlackRock has the responsibility for making sure that their SLV is backed by silver. Ted Butler is clearly pointing out that a big percentage of it, 11 million shares, is not backed by silver. That's huge. And again, where is Gensler's response? I don't know. Ted says he gets a generic, hey, thanks for your comment. But again, that's what I've been talking about for a long time, folks. The market's rigged. They now know that we know this, okay? More and more people are starting to discover this. Now, when I say more and more people, we are still a small percent of people out there, maybe 1% that understand how rigged markets across the board are rigged. But it's growing. 1% grows into 2, 2% grows into 4, 4% grows into 6. I mean, well, maybe my math is a little screwed up there, but things kind of jump up quickly. And this is not good for the CME group. This is not good for BlackRock at all. And Ted Butler goes on to say, the increase in overall excess level SLV shares shorted comes to 2 years after BlackRock amended the risk factors of Trust Protected to warn those who shorted risk of shorting shares in SLV in the face of growing concerns of physical silver shortage. BlackRock knew at the time that there's a physical shortage. They warned people of shorting silver in SLV. And again, at the time in February 2021, the short position in SLV was close to 15 million shares, which has now grown by more than threefold. Okay, clearly BlackRock is ignoring its own warning. It has failed in its fiduciary responsibility to protect shareholders of SLV. Now, folks, if you don't know who BlackRock is, BlackRock can have any one of us disappeared in a really short period of time, maybe even replace us with a double. That's how much money they have. Now, I'm joking half kind of a way, but BlackRock it's trillions, man. If BlackRock went down, economies would go down. Just put it that way, all right? And we're going to get into that in a moment, too, when we talk about CME Group. There's a few, I had a great conversation I had with the my other man crush or whatever, whatever crush it is on the AI robot that I've been talking to. But here, let's move along and finish Ted Butler's complaint to Gary Gensler. Oh my God, I keep forgetting the guy's name. Ted says there can be little doubt that those shorting shares of SLV, the largest silver ETF in the world, are doing so because the required amount of physical silver is not available to secure in deposits required by the prospectus. This is fraudulent to existing shareholders and manipulative to the price of shares, okay? And again, Ted Butler, we're going to read this. This is all Ted Butler. In light of your recent efforts to bring transparency to the practice of short selling, particular emphasis, blah, blah, blah. I'm sorry, Ted, don't mean to say blah, blah, blah. But basically, you're reminding BlackRock that they have a fiduciary responsibility to make sure that their shares are backed by silver, and this doesn't happen, and they haven't done that. And Ted says, I would implore you yet again to prompt the SEC to dig into the issues and force BlackRock to uphold its fiduciary responsibilities to shareholders of SLV. Oh boy, that's a lot of reading there. But and Ted, notice as I think you may be aware, it's been a month since I petitioned the SEC on the matter, since the short position in SLV has been gradually reduced. But Ted's position here is that all said, and again, very important to think about here, folks. It still appears to me that the only reason, this is Ted Butler talking, for anyone to short shares of SLV is because the availability of 1,000-ounce bars is so limited that the short sellers had no real choice but to sell short, and the aim of delaying the coming price explosion. I mean, all things considered, the new shorting is a mere act of reckless desperation, if anything else. Mr. Butler nails it again. Is there any wonder I have a man crush on this guy? And again, I'm joking. Trust me. Well, half joking. I do have a professional crush on this guy because he's got a professional career. Excuse me. Oh man. That's what happens when you get old, decrepit, and your mouth gets dry. Here, let me take a quick sip here. Is there any wonder I have a man crush on this guy? Because again, it's a professional crush that I have because he just understands these markets so well, and he explains it to in a simple term that most people can understand it. He takes the COT reports, reads them, understands them, and then relays it to us. This man deserves a lot of respect out there. You know, when the cards fall wherever they may and how they may fall, Ted Butler really is one of the the fathers of explaining to the general public out there how these markets are manipulated. And folks, I hate to be a killjoy, but it ain't just the silver market that's rigged. Gold market's rigged out there. All the markets in the Comex markets are rigged. And I'm going to get into why I believe that in my conversation with AI as well. Meanwhile, take a look at 1,000-ounce silver bars that Ted is talking about. That, I mean, again, this makes me wonder a little bit as well. But my first thought is, all right, Ted says that there's a shortage of 1,000-ounce bars out there, all right? That may explain why premiums are so high on like Silver Eagles, perhaps, and other products, is maybe they're taking Silver Eagles, which they know are refined to meet Comex standards, and refining them back into 1,000-ounce bars. Crazy thought, perhaps. Are they spending a big premium to do that? I don't know. It depends on how big the default is if they don't get those 1,000-ounce bars. But meanwhile, I said, well, see what 1,000-ounce bars cost out there and who has them. Lo and behold, one of my favorite big companies out there, SD Bullion. By the way, I'll beat their prices if you live in South Florida anywhere. Come to our brick and mortar store. I'll beat SD Bullion's prices on their reasonably priced products, as well as I'll beat Apmex JM Bullion as well. There's my advertising's done for the couple minutes. But I take a look at their 1,000-ounce bar prices here, and they're like 65 cents over spot to the retail public. And I'm thinking to myself, well, Ted, if there's such a shortage of 1,000-ounce bars out there, why does SD Bullion has 1,000-ounce bars, and why are they spot plus 65 cents only? On a retail basis, but if but lots of buts here, man. I'm the big butt guy today. But 1,000-ounce bars, really, if you take a look at it, how many does SD really have? 4, 8. There's 12 bars right there, man, and they have a premium of 65 cents over. Is that going to satisfy the millions of ounces that are short in 1,000-ounce bars at Comex? No. So that is probably not a good. If someone were going to debate this and say, well, Ted, you're claiming that there's a shortage of 1,000-ounce bars out there, deliverable bars that need to be put into the SLV, but yet SD Bullion has 1,000-ounce bars at 65 cents over. Why wouldn't they buy that? Think about this, folks. There's 8 of these. I would like to talk to SD Bullion because they are a big 800-pound gorilla out there and buy a lot of this stuff. How many Comex bars they could immediately get right now? If they needed to. Could SD Bullion fulfill an order for 500 Comex bars right now, 1,000 Comex bars, 2,000? What's the number where Comex is not able to deliver those bars? And I think that's what Ted Butler is talking about. You can't rely on what is available out there in the retail markets on this kind of silver. I suspect on the larger scale, maybe there is a big shortage of 1,000-ounce bars, and that's why there's this big short position, the SLV, that Ted Butler talks about. Man, I hope some people watch this video tonight because there's some good content here. So I asked my other they, them, who, he, hey, whatever crush here, AI, and as you know, does AI have a gender? I kind of doubt it, and I'm fine with that. Does the CME Group Comex Silver have the physical silver to deliver if all their customers demanded delivery at once? Let me take a deep breath here because this gets long, and I'm going to try to cut out short here before I get into the really long stuff. I'm going to take. Can you hear the rain in the background, by the way? Turn off the speakers. Hang on one second. I don't know. I like a good rainstorm. The Commodity Exchange Inc. Now again, the question I ask here, does the CME Group have physical silver to deliver if all the customers demanded delivery at once? Very specific question I ask. The CME Group, Comex, is owned and operated by blah, blah, blah. We know that. When it comes to physical delivery of silver, the Comex Exchange operates under a fractional reserve system. Interesting. Truth be told here, we know that, they know that, and AI knows that. So that's a great response right there, which means they do not necessarily have enough silver on hand to deliver to all customers who might demand it at once. Fact, not untrue. We know this to be true. We know they operate a fractional reserve system. Instead, the Comex maintains a system of warehouse receipts and transferable warrants that represent, all right, here we go. Here's the key word. Represent claims to specific amount. Represent claims. Now, are these, well, anyways, I could go down another rabbit hole there. Amount of silver stored in approved warehouses. These warehouse receipts and warrants can be bought and sold in exchange, allowing buyers to sell and trade silver without physically moving it. But prior to this, it tells us it doesn't have enough silver if everybody wanted it. It does have enough silver to move around small amounts here through its warehouse receipts and transferable warrants. But it says here, if a customer requests physical delivery of silver, the Comex settlement process involves transfer of warehouse receipts and warrants rather than the physical movement, blah, 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 blah. It's worth noting that the vast majority of trades are settled in cash. We know that. I know that. However, again, if the Comex were challenged to deliver all the silver, and that's the question I ask, could they do it? All right? No. It's a fractional reserve system. So my next question here is it possible that this could cause a CME default? AI answers, it is possible that a large number of customers demanding physical silver at once could create a significant strain. I like how it really is kind of, I don't know. Maybe the CME Group had some say in how this AI is programmed, but it would sound like it. But could create a significant strain on the Comex fractional reserve system and potentially lead to a default on delivery obligations. However, the likelihood of this happening would depend on the various factors, blah, blah, blah. Somebody need to be delivered, blah, blah, blah. The Comex does maintain minimum standards for the amount of physical silver that must be held in approved warehouses. Blah, blah, blah. That being said, the Comex is not immune to the risk of default or other disruptions that can arise in any financial market, particularly during periods of extreme market stress or uncertainty. Investors and traders who participate in silver futures must be aware of these risks and take part. Okay. So I ask, what negative effects would a default at Comex silver default? What effects would a default at Comex silver have on the marketplace and CME Group? And it says right here, and this is actually where it gets kind of interesting, folks. A default on silver delivery obligations by the Comex could have a number of negative effects on the market and CME Group as a whole. First, a default could undermine investor Comex and the broader futures market. Now, this is something I've been talking about for a while, folks. You know, if the silver market is rigged, really think about it. I'm sure a lot of other markets are rigged out there. I've been talking about this for a while. And when people start to discover that, when they discover that the casino is rigged, again, I may be a poor old country coin dealer and precious metal dealer from South Florida, but I can see the big picture, and I know when a casino, once the well has been poisoned, they're screwed. And I think Comex is close to that point. LBMA is close to that point. The metals exchange, London's metals exchange, with their nickel trade, is that they've already passed that point of credibility. But I digress again. First, a default would undermine confidence in the Comex and broader futures market. Again, something we talk about. This could make it more difficult to market participants to hedge positions and manage the risk, and could result in higher volatility and wider bid-ask spread, something we're seeing now. Second, a default could lead to significant loss of credibility for the CME Group. Loss of the casino where the discovery price of gold, silver, and platinum and other markets is made, okay? Which is one of the world's largest and most important which is one of the world's largest and most important financial exchanges in the world. This could lead to damaged exchange rep and potentially lead to regulatory scrutiny or legal action. Well, I would hope so, of course. Thirdly, default implications for silver market and the wider economy. A sudden and significant price in silver, a drop in price could have ripple effects across other markets, leading to losses for, okay, I should have asked about a sudden rise in the price of silver. But again, it says how serious and how far-reaching a Comex default would have just in the price of silver, which is an extremely small market, folks. So I ask, why would a default result in a loss of confidence in the U.S. dollar, which is a currency? And again, this is what it told me. A default could be a loss and result in the U.S. dollar. It said that in a comment there, which Comex futures contracts are denominated. Why could this lead to a weakening of the dollar and potentially higher inflation? And why would investors seek out alternatives to assets to protect their wealth? I just kind of threw back the questions that from the answers that AI just gave me. And it says here, a default at Comex could lead to a loss of confidence in the U.S. dollar for several reasons. Firstly, a default would suggest that Comex does not have sufficient reserves to meet its delivery obligations. Voila, of course, what I've been talking about. Potentially calling into question the stability of the U.S. financial system as a whole. Folks, reread this 10 times over, and you're not, you know, again, AI is like a child giving you information, not knowing how to spin it in its opinion one way or another. And maybe it does spin it one way or another, but in this question, it's like a child giving you an answer honestly. Calling in the question and stability of the U.S. financial system as a whole. That's pretty powerful. This could make investors, markets, participants wary of holding U.S. dollars or U.S. dollar. Secondly, default could lead to a sharp decline in the price of silver, which is hedged against inflation. It could lead to investors question the reliability. I don't know how a default would lead to a sharp decline in the price of silver. In fact, folks, I should have asked AI that. I think it's wrong on that. And remind you, garbage in, garbage out. AI is not always correct, but that is an interesting comment that I kind of forgot to question on. And it goes on, if investors lose confidence in the U.S. dollar, they may seek alternatives to protect their wealth. This include currencies, blah, blah, blah. Wow. Anyways, I don't want to make this such a long video, but what a great conversation I had with a computer. I asked, why is the CME Group Comex so important to the stability of the U.S. financial system and dollar? And it says the CME Group's Comex exchange is important to the stability of the U.S. financial system and the dollar because it's one of the largest and most important futures markets in the world with significant role setting global prices for commodities such as gold, silver, and copper. And as a major derivatives market, paper market, the Comex provides a way for investors to produce and manage risk and hedge against price flux. Now, in an ideal situation, it's about managing risk and price fluctuations in the commodity market. But that's bullshit, folks. What you really got going on there with the real manipulation that the AI doesn't point out is that you've got big commercial money out there just monkey hammering, manipulating these markets for their own sheer profit, not dealing in reality or real supply and demand fundamentals. And the CME Group's allowed this real dysfunction to happen in those markets. But again, I digress. Supposedly, this helps to promote stability and liquidity in the underlying physical markets. And moreover, the Comex is denominated in U.S. dollars. Very important, folks. Remember this. This is like epic shit here, which means that the price of the commodities traded on the exchange are effectively set in dollars. This makes the Comex an important benchmark for the value of U.S. dollars in global markets, as well as a key driver of demand for U.S. dollars amongst investors and traders. I don't think most Americans, including myself, and maybe even you, realize how tied the U.S. dollar is with the CME Group's commodities markets. How tied in. And that a default in the U.S., the crooked CME Group's mobster Comex markets, a default in that group now could be a matter of national security, now could be a matter of entire markets failing, yet they still refuse to fix it. This is typical government, this is typical criminal behavior, but again, I digress. This makes Comex an important benchmark for the value of a U.S. dollar in global markets, as well as a key driver demand for U.S. dollars amongst traders. Hey, listen, if you want to pause and read this, go ahead. I think it's important to read all this stuff. And I ask again, what would a Comex default do to the U.S. economy? A Comex default would involve a failure to deliver physical silver. Again, it talks about how this could just kill the U.S. dollar. Folks, maybe I'll get into this tomorrow a little bit more. And I'm going to scroll down here real slow. You can stop the video and read the rest of this. Perhaps you want to. And here I go. Again, stop. Hit the stop button and just read this stuff. You can read the rest of my questions here. But if I continue to read this, we'll be here a long, long time. So there you go. there's all my questions. Some of it is repetitive, but I didn't want you to miss. And I talk about national security here. You can stop and read this stuff as well. Nice thing about YouTube is you can stop and read stuff. You can slow it down and read it, and that's what I'm giving you a chance to do here as I scroll down, rather than spending another hour here. Again, some of it's repetitive, but I hope you enjoy that, folks. I took some time, and it kind of brought me down a rabbit hole talking to it. What are the best deals out there? What are not the best deals out there? Well, Silver Eagles are just off the hook, man. Silver Eagles now. I'm going to tell you what I would buy and sell them for in quantities of 100 or more. And even in bigger quantities, I would pay more and sell them for less, okay? But Silver Eagles right now, I wouldn't recommend you buy them, but if you had to sell me Silver Eagles, I would pay spot plus $5 or $5.50 over spot right now. I'll buy 90% constitutional silver at spot plus $4.50 to $5 over right now. And your local should too as well. So if you live in South Florida, I'm By The Sea, and I'll beat Apmex, SD, and JM Bullion. If you're buying 90%, don't do it. Don't do it. Please don't do it. You're going to pay at least spot plus $8 to $9 and more with me. Probably higher on Apmex, SD, and JM Bullion's websites. Silver Eagles, I could be a seller right now at spot plus $10, but again, I think Apmex, SD, and JM are even higher than that. My prices are better than they are, and better than a lot of the locals down here in South Florida. Even the good guys, a lot of good people here in Florida. I'm not going to diss anyone. I'm just very competitive. And what else we got going on? What's the best deals out there? There's still 100-ounce bars at spot plus $2.50 or less. 1-ounce bars are spot plus $3.50 or less. I think Apmex, SD, and JM have them for a lot more. I'll beat their prices, like I said. Best deals out there in gold are not Gold Eagles. Gold Eagles I've got for spot plus 117 in small quantities. I think Apmex and JM and SD are even more. I wouldn't advise them. I still think gold bars are the best way to buy silver right now. Let me type that in. Gold bars, 1 ounce. There you go. Apmex, Valcombis, JM. Screw Apmex bars. I'm sorry. I like Apmex. They're a good company. But Swiss, I don't like their name all over bars. I'd rather buy Swiss Pamps and Purse personally out there. And Engelhard bars, if you could find them. That's a damn rare bar probably right there. I'm sure that's a big premium. But spot plus $70 or no more you should be paying on bars. Spot plus 117 on Gold Eagles or Bullion or Buffaloes. Gold Buffaloes is what I got them for sale in smaller quantities. If you're buying larger quantities, I can beat, sell them for less. And again, I advertise to beat Apmex, SDJ, and Bullion, and the local guys in South Florida. So if you live in South Florida, I'm By The Sea, 10 to 4 Mondays through Fridays. But I'll get into that in a moment. I want to talk about yesterday's video, which is beat the best out there. Man, it was an advertising video, I admit it. I was just advertising to beat everybody out there. So, patting myself on the back, all right. And when I say beating everybody out there, that's not necessarily true. Your local dealer may beat my prices here, all right? That's why I always encourage you to shop local if you can. If you live in South Florida, likely you're going to deal with me. But if you don't live in South Florida, rather than buy online through Apmex, SD, and JM Bullion, try to find a good local dealer. A good local dealer usually can give you better prices. And, and shop around. There's more than one local dealer, or you may have to drive an hour or two to find a good one. But I can't stress enough how important it is to find a good local brick and mortar store. Really, that's about it. Let me move along here. I'm going to answer a few questions here. And Anxious Stacker, how you doing, man? Keep stacking like you are. I kind of was looking at what you're doing there. Pretty cool stuff. Rick says I kept it short. Boy, that was lucky. Lucky. I don't keep it short hardly ever, Rick. But when I do, boy, I was trying to think of one of those good Dos Equis ads. When I do keep it short. Here, I'll let you guys fill in the blank. Thank Rick. Appreciate that. Silverliner, what's going on? I'm glad to hear that. Doesn't come close to... I said there are guys out there that have really low prices. I don't know who that is, and I heard they do have good prices. But, my obligation is to go beat the big 800-pound gorillas out there. My obligation as a small business is to go out there and beat Walmart, go out there and beat Lowe's, go out and beat Home Depot, and still make money and still deliver good product and good service and do it better than they do. And who are the Home Depots and who are the Lowe's out there? They really are Atmex, SD&J, and Bullion. They're the three biggies. Is Monument Metals cheap? Yeah, they very well may be. And if you're getting good deals with them, keep going with that silver liner. Meanwhile, I still, again, recommend you keep that money local if you can, even if it costs you a little bit more. Boy, my lips are dry again. 1 sec. Marcus Thomas, what's up, dude? Appreciate that. Christopher McCormick, what's going on? Cheers to you as well. Christina Napolitano, some dealers are saying it's hard to get products from certain mints. Are you having a problem? Yeah, that's why we're seeing an increase in premiums in a lot of mint products, including Britannias, Krugerrands, which are hard to get right now. Silver Maples are like delayed on delivery right now. It's hard to get them. They're going to be at least spot plus $5. Wouldn't recommend them. There's generics you can buy for cheaper. It looks like I may have some availability to the Noah's Arks. I think those are made by, I don't know, Albania or some country or something like that. But those are pretty cool. That's spot plus 360. But yeah, it is getting harder to get some products out there. Tough to say why. Show Pro, what's up, dude? Thanks for commenting. Psychological numbers, absolutely. Single and Looking says premiums are high. Just stop buying and watch premiums come down. It's a no-brainer for buyers. This happens over and over. Premiums are higher. Just stop buying and watch your premiums come down. Well, there is some truth to that, but it kind of ignores the situation that's going on. Why are people buying? Well, people are buying because they're nervous. People are buying because they know premiums could go up at any time. That is the physical market where premiums go up when demand gets high is a real supply and demand market. It's a real capitalistic marketplace. Again, supply and demand. And you're right. If the demand goes down and no one is buying physical, then the premiums will come down. So you're absolutely right, Single and Looking. But what you're forgetting is, why are the premiums going up? Well, the premiums are going up because the product gets scarcer, because you got more buyers out there. That is a real supply and demand marketplace, and really that is a real organic marketplace, something that I wish we had in the silver and gold markets, and probably in the oil markets and the grain markets and all the other markets that the crooked CME group runs. But again, I digress. Thanks, Single and Looking. I can't disagree with you at all. You're absolutely correct. And folks, listen, I'm going to call it quits. If you ever not find me on the YT channel, it's because well, maybe I was just a little too risque for them, or maybe I did something stupid. I don't know. Who the hell knows? What's stupid in their eyes? But you can find me here at this place right here, which is the place of free marketplace and a place of free ideas and free speech, like this place as well. Wish it was more popular than it is. And where are we going from here? I already answered questions. I'm going to here. Oh no, there we go. I mumbled twice. Okay. You can also catch me here. Oh my gosh, you know what that is? What an inopportune time for that to happen. Okay, that was my backup battery. It looks like the battery's going dead. Oh, maybe the plug came out. Oh, okay. Well, there's no editing this stuff. But you can also catch me on Twitter, another great free market place that I think that Elon Musk has turned into a real free market or free speech forum. Is why actually since 2021 I'm actually starting to post out there. And again, you can ask me questions out here. I thought this post by VBL's Ghost out there was wonderful. It's gold visits fiat land. And if you kind of get the guess to what's happening, the gentleman dressed in black is gold, kicking down all those fiat currencies, just relentlessly, mercilessly pounding away. And that's what the price of gold has been doing right now. And that's, in relation to the buying power of the U.S. dollar. That would be a great meme and a great way to describe it. There's the gold kicking down the fiat system. And I believe, folks, we're going to see that more and more. Meanwhile, if you're looking to buy gold, silver, and platinum, you live in South Florida, I advertise, and I will beat the locals down here in South Florida on gold, silver, and platinum products, on reasonably priced products, I will. And the same thing with Atmex, SD&J, and Bullion. I'll beat their prices as well. So if you're looking to buy gold, silver, and platinum, give us a call anytime at Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Did you hear that? A bunch of spring breakers just walked by. Turn up your volume and reverse that. A bunch of spring break girls just walked by the front of my store here. Oh, man, they're loud. Those young teenage girls. Well, anyways, no, teenagers. They're in college. They can't be teenagers. But, boy, those young girls are loud. Anyways, man, I am so easily distracted. Well, that's it, folks. You have yourself a wonderful evening, and I'll talk to you tomorrow. Bye now.